Joining us right now, Peter Boockvar from Bleakley Advsory Group, Sri-Kumar from Sri-Kumar Global Strategies, and Mr. Santelli. I get to see you twice, and this is good. Usually I only get to see him like once for a brief second.
And this is afternoon.
And this afternoon is when I say good morning. You know, a lot of things are going on here.
This is a good exchange.
Here's my question for Boockvar. My question for you, Mr. Boockvar, is the markets are up on a day, and they're up big. The question is whether they're going to hold on.
Tough question. I think we'll see whether there's any actual news to the low-level talks between China and the U.S. Obviously, we're focused on Turkey, but I'm actually very focused on Italy. Italian bond yields continue to go higher, and I want to see the trend of that. And as we get into September, there's going to be a lot of chatter about the ECB cutting QE in half, the Fed ramping up QT, and see how the U.S. economy deals with that and rising interest rates, another Fed rate hike, and all that mix.
But Boockvar, hold on, just help Sarah with the question we had before about China. Do you think this is actually real? Should the markets be moving on this? What's happening here?
I think that there'll be some cosmetic deal done before the midterm election. I say cosmetic because I don't think it'll be much very substantive. The Chinese will buy more liquefied natural gas, they'll buy more soybeans, but the real crux of the problem and our worry about intellectual property and the transfer of technology, I think that's going to be way down the line before any agreements are done there.
Sri, what do you think about the impact of just a word that the Chinese are going to come here with some sort of delegation and talk to Treasury Department officials? A, is that the reason we're seeing the Dow soaring more than 400 points? And B, if that is, what does it tell you about what's been priced in terms of a trade war with China?
Sarah, in terms of the first question about the economic team coming over to the United States to talk, it has happened before. Liu He, who was the chief coordinator, negotiator for President Xi Jinping, has been here in the past. It looked as if in May we did have an agreement to tone down the trade tensions, but President Trump very quickly vetoed it, and we went back to square one. I don't see a way that we are going to quickly resolve these issues. I think they may want to have some symbolic victory ahead of November from President Trump's viewpoint. But I don't see this getting resolved at all, Sarah. That's the first part. And in terms of what is happening on the Chinese side, despite what Larry Kudlow said in terms of the meeting with the president earlier today, the Chinese economy is not crashing. The electricity consumption is still growing. And my meetings recently in Beijing and Shanghai suggest that the economy is still in fairly good health. They are not going to buckle down and give in to U.S. demands.
Okay, but Sri, last time I saw you, so now you're glass half full on China, but last time I saw you, I think you were glass not half full, but glass empty on the U.S. What do you make of Walmart news today and what that says about the consumer?
Well, first of all, Andrew, I'm not saying the glass is empty on the United States at all. I'm not talking about a recession. I'm not talking about a crash. And including at the time when we met last, I'm saying that the bond market is giving you an indication that the bond yields are still coming down. The spread between the 2 to 10-year Treasury reached the low point not seen since July of 2007. Those are issues which are significant warning signals, but that glass is also still half full. Regarding what is happening on the Walmart side, yes, retail sales have been strong. The impact of tax cuts are still going into July.
Yeah.
But the real issue is, Andrew, whether it persists into the second half of the year, into 2019, which I seriously doubt. Go back to 2006 and 2007. The equity market was booming into the first half of 2008 when we were already in a recession. The recession had begun in December 2007. The bond market, the spread went negative in November of 2006, indicating that a recession was beginning a year later. The bond market is a better predictor than what the retail sales have been or what has happened with equities.
No question. That's why there's so much focus on that flattening yield curve. Rick, what's your level of enthusiasm and celebration with this market up 427 points and yet still a flattening yield curve?
I think I disagree with pretty much everything Sri just said. The flattening yield curve is owned by central banks. They could have any yield curve they want, let's be frank here. And as far as China, our pitcher's half empty, half full. In the U.S., I'd say half full. I think their shot glass is half empty in China. Listen, their economy has had issues long before the trade issues arose. And just put a Shanghai Composite on top of the S&P 500 and see what's happened since the trade issues have surfaced. I think this president isn't going to play political games in front of the midterms. As a matter of fact, he might use what's going on in negotiations to further his cause. And the Chinese should maybe take notice of that, because if he holds tight after the midterms and power doesn't change significantly, he's going to be even less willing to budge based on what he perceives as unfair trade issues in China. China's going to blink. The market is up today and was down yesterday, but think about it. It's because there's a tailwind if it gets resolved, but our stock market economy could more than survive if it doesn't. I don't think the same could be said about China.